Welcome back to First Pullback. Today is Friday, May 22nd, and we are closing out the trading week. If you look at the ES and NQ micros today, the market gave us some real aggressive moves, some great volatility, which helps wrap up an 8-week winning streak in the market. Because if we go over to the continuous contracts for the S&P, you can see right here 1, 2, 3, 4, 5, 6, 7, 8. These are all weekly bars right here. So 8 weeks in a row, it's been going nothing straight but up right there. So the market is extremely bullish right now. So I'm going to show you how my strict 23-hour macro anchor filters out the noise and keeps your execution clean. So let's look at the chart, because there's no reason to fight the trend or guessing where the micro pivots are. So one thing I have been working on is a indicator that automatically puts the points on it from the previous days. So it uses the previous day's high and low right here, because if I take the low, which is over here, and the high, which is over there, you see how all my fib points line up with it over here. And so what that does is I don't have to keep it on or have boxes on for the next day. It keeps it on right here. But as you can see, it didn't come down and hit it down over here, because the first one's a 23.6 line, and it actually has a little reminder up here. So waiting to hit the 0.382 entry, current exits none. Then these are the entry levels we have right here, and those are the exit levels coinciding with the entry level. So if it hits at 382, exits 236, hits 618, exits 382, hits 764, exit moves to 447. So that's what it is. So we wait for it to hit this purple line down here, and as we see, that did not hit it. So what I'm going to do is I'm going to put a box on here to signify that moving forward, I need to be on the lookout for the coming back and hitting this box, because it is a valid trade even if the next day passes it up. So we'll be looking for it on future days for it. So let's go ahead and nope, not that one, that one right there. So that signifies we are still waiting for it to come back and hit, and I'll just draw it out there even further. And then for what we have is I did another one, and what it does is it does the current day's fib retracement levels here as well. Now the lines right here, it's the same lines as the previous day. It just it draws it from the low to the high. See if we go over here, let me show you this real quick. So what you can do is fib direction, instead of high to low, you can change it low to high. You can see it changes it, but obviously we were doing it from drawing the fibs today from high to low, because the first one's at 23.6 and all the way down to the 76.4. So right now this was, let's go over some of the trades here real quick, and actually I'm going to hide this one right here to make it easier to see for what it's going on for. So starting off in the day right here, the price opened up right there, and since we started making higher highs, we just started following it up there. But I don't trade during this time. This is about going into 7 and 8 p.m. It just moves really slow, although a really nice trade setup did happen right here. Went down to 38%, right up to 23.6, so that one is done. And then when it makes a higher high, we just keep following it up with our fib tool right here. So here's another trade in the overnight session, back to the 38 up to 23.6. Then and as well, this is just a measured move. You can see it went down all the way to the 0.447 and hit the 1.146 before it sold off and started reloading again. And then for another trade setup, down to 38 again, up to the 23. Now, for it to be us to reverse it and start going the other way, we would have to have the price break the previous low of the day, which is right down over here. It did not, so we are still looking for the uptrend level. And so getting over here closer to when the market's opening, what's it, 7:10 a.m., we have, there's a new high. There's another one. This is when I got here, because I drew these boxes so I knew what to talk about today. So anyways, so here's the first one. There's the high, and there's the low all the way. That just keeps anchored there the whole day. And from it, their price went down, hit right off the 38% right there, and then right up within 1 5-minute bar. Extremely fast trade. I think it happened even within like the first minute of it. Hit it, went out right there, and so easy trade. That one is said and done. So we look for the next one over here. So on this one, what happened was the price came down, got me in right there, but then within the first 30 seconds just skyrocketed up and took me out right there for a super easy win. because you can see I got in right there at 74.97.25, which is right there, and then got out at 75.03.75, which is right there. So even on the 1 minute chart, it doesn't even show it. That's how quickly it happened for it, just going back down there, hitting it, and then going right back down up. So anyways, that was that trade. Super fast trade, kind of a weird trade compared to usually how it happens. So going over to this trade right here, for this trade setup, here was one that happened pretty quick, and also I was a little bit unsure about. And I'll talk about the Nasdaq as well, because there's another trade on Nasdaq that was kind of weird. So what happened was the price, let's get rid of this box right here. Price came down, got very close to hitting the 30%, and usually when it gets down pretty close without hitting it and then goes up and hits the top, you have to be careful with it, because normally I'll say that's good enough for government work and we are done right there. But in this instance, I went ahead and waited for me to get filled right here, which I did. And then I got out a little bit early before the line, because a lot of the times when price comes down, it kind of teases you with not getting hit and taking it out. It will probably give you one more chance to get into it. And so I rolled the dice, got into it, but I got out even earlier than I normally would, because normally my exit is just below the 23.6, like right around here, probably around, usually it's around like right there, something like that. But I got out at 207.25, so you see pretty early, so I just wanted to take a little profit right there, because I was afraid that this was really the move, even though it didn't hit right on the 38, but it did go hit the exit. So just took a little bit of profit, got out of there. And sometimes that's the way it does happen for these trade setups, because not always does price go down and perfectly hit the Fibonacci level and then go up and perfectly hit the Fibonacci level. You have to give a little bit of grace, a little bit of room for it. And so a lot of times I just consider that one to be done. I'll show you on the Nasdaq as well how that happened as well. But that was the last trade for the day here in the SP 500. Is already in the afternoon session, and it was also going into the holiday weekend for Memorial Day on Monday. So I definitely want to be out of all the trades, because after this time, there wasn't going to be a whole lot more move. Now, we did get a little bit more move down to end the day as the market sold off. People were just taking some profits and stuff like that. But I just want to make sure I got out and was flat for the SP 500. So going into, well, really Monday's a holiday, so there'll probably be a whole lot of movement unless there's some crazy news with Iran or something else happening over the weekend. So going into Monday, or really Tuesday of next week, this is the main trade. It's the previous day's trade that we were looking for, and let me put that back on there. See, there it is right there. So we're looking for price to come down, hit that purple line, and that'll be the initial trade we're looking for going into next week for the S&P 500. Now going up here on the Nasdaq. Nasdaq was kind of the same thing as SP 500 day. Both these markets are moving pretty much in tandem. And you can see right here, we have the previous day's indicator right there. And then what's this one? Oh, this is my 3-in-1 indicator right here. I just created this one. It tracks the previous day's highs and lows, so it's easy to draw off of. Has an EMA crossover, which also provides an alert for you, and has the semaphores on there. And the reason why I did it this way was because in TradingView, if you have, I have like not the free plan, but whatever the next level is like $9-10 a month. You pay it for the year. They only allow you 5 indicators on here. So between these indicators I created, plus the semaphore one I had, and the EMA cross alert and the daily high low, I had 6 indicators. So I created this one right here, which has all of that in it. And it's all customizable as well. Semaphores, the previous day high low, and it has some other stuff. It has a channel drawing where it will show like the latest channels you can draw. I really don't use that, but that was cool. If you use the cloud to trade, you can put that on there as well. It has that, and then also it has a dashboard score up here, which I need to move over there, but it just shows you like which way the EMAs are going for you. And you can also set up the session time zones for everything's calculated. I have everything set up for the 23-hour days where price opens at 5 p.m. U.S. Central Time and closes at 4 p.m. U.S. Central Time to it. And so here you can see the EMAs are all customizable. You have cross icons, alerts, because when it crosses over, yeah, there's the alert right there, because that is a trade setup I have. When you get the cross, you just go back to the last semaphore and you wait for price to come back down to the 38%. Same rules apply, and then you're out there. So just another way to trade, looking for that crossover right there. But anyways, so we are looking for going into Nasdaq. Let's go ahead and hide that one because it never came down and hit it, and then when the market opens on Monday, those will get deleted and go on over here. So we want to keep this box over here to let us know that we are waiting for the pullback right in here for this previous day's Fibonacci moves over here, and so we'll keep on looking for that one. So going into the Nasdaq, here was the low right here, and it started off overnight just, you know, churning higher up here, going on, making a measured move, and then right there. And then unlike the S&P 500 today, the Nasdaq went and made a new low, because there was a previous low right there, and as you can see, it ticked down it just a little bit and created a new low. So when that happens, we change from looking for long pullbacks to short pullbacks. So we take it from the previous high, which was over here, and as you can see, this had just been making measured moves down right here, and there's the high, there's the low. So what we're waiting for is the 38% line to get hit. There it is right there, plus off of the EMA right there, which isn't a trade I look for, but anyway, just interesting to look at. Hit it, came very close to hitting the 23.6, and to be honest, this was another one of these setups where this was probably good enough to consider it being done, but since it didn't, I think I had my exit probably about right here. You can see how close that was. It didn't quite hit it, but I did get a little bit nervous because I was afraid this thing was going to rocket up and just take off and leave me there. But the price did keep on going up, hit the 61.8, and then again, we had another exit right over here. And I'm sorry, you know what? I actually did not get in right there, obviously. Did not get in there either. It wasn't until over... Where was it? Oh, you know what? I didn't even get in this trade. I didn't get in this one at all because it scared me. That's why. Because it hit there, didn't take it out right here, and then hit the 61.8 and came very close to 38% come down hitting that, but didn't hit it right there as well. So between those two, if I was in this trade like right there and then I got it right there, I probably would have gotten it a little bit sooner than later, because you price in these trade setups will usually give you a second exit to get out. It may not be a perfect exit, but at least give you a little bit of profit. But since that gave it right there and I had missed it, I just said, you know what, there'll be other opportunities to get in right here, so we're not going to do it. Now I'm not sure, let's go to the 1 minute chart and look at that one here real quick. Let me see something here. Did that one give you an opportunity? No, it did not give you an opportunity, because then it took off right here right when the market opened right here, went down, hit down right here, and you hit down right there. And actually that was a third exit to get out of there if you still were in this trade. Hit it right off the EMA as well, and then skyrocketed up to make a new high. So that was a trade setup right there that I was looking very hard of getting into, but I was nervous about it, so didn't want to get caught in the wrong side of the trend, so I just didn't do it. But then we had the price go up and make a new high right here. So there's a new high it just broke, so we switch from looking for shorts to going to longs. So we take the previous low, which was right there, draw it all the way to the top, and here we have some nice trades set up right here. So the first one came down, got me in right here, never came in, hit the 23.6, didn't get close enough to consider it be done, so I wasn't worried about it. Went up, hit the 61.8, and then came and also hit my 764, because I have my exit high, slightly higher than the pure 76.764 entry for it. So I got them right there, and then had my exits. Where is that? 25.78. I did get about, yeah, I got out about a little bit early, just to make sure I got out of there, and got there for a nice little gain for it. And then obviously the next candle, it went up and filled it just fine for it. So that was a nice little trade setup right there. And then we had one more setup because price came, made a new high right there. And this is the same setup here as we had for the S&P 500, right around, yeah, right around 1:30 p.m. Getting late in the day, so wasn't really sure about it, but we had price going down, hitting right off the 38% and right off the EMA, which I use the 89 for the EMA right there. It's just a Fibonacci level. I use the 89 and 610. I have a whole Fibonacci level sequence things that I've done research about, and I like using these two for the EMAs. They seem to give the least amount of fake outs as far as the cross alerts go for it. But anyways, hit down the 38, went up, hit the 23.6. So really easy trade right there. I think that trade was just a couple minutes long, if even that. And then by the end of the day, that was it right there. There's nothing more for the ES or the NQ. So going into Monday, or really Tuesday, because Monday markets close at noon, the futures markets, and there just won't be a lot of momentum, volatility in there, a lot of volume for it. So there's not gonna be a whole lot going on. So we'll be looking for Monday, really Tuesday. Hopefully we get a bit of a push down to come back to here, so we can go long right here and look for that trade setup right there. So same thing for the ES as well. So anyways, that's how the mechanical levels, that's how they played out to wrap up the week. So I'm just building this channel to document my daily process and show how it's structured. Framework using Fibonacci levels handles the macro volatility, and to where you don't have to rely on fear or greed for your trading style. And so that's what I've done for years now. And I'm also working on putting the custom 23-hour tracking scripts together to share down the road once the setups are finalized. I get everything finalized the way I want it to there. So anyways, if you trade the ES or NQ micros, just drop me a comment below. Let me know what rules you use to stay on the right side of the trend, because that's the biggest thing. You want to stay on the right side of the trend. And yeah, also hit subscribe if you want to follow the daily recaps next week. All right, so trade safe, keep it mechanical, and I'll see you on the next pullback. Take care.